Good morning, and thank you for joining us today. I'm Olivia Rios, Director of Operations and Programs at the LA Latino Chamber, and our team extends warm wishes to our fellow small businesses as we celebrate Small Business Month. In today's webinar, we'll be discussing conventional and alternative business financing to share the various types of lending options for business owners, including business terms, lines of credit, hard money, and equipment loans, and asset lending, and more. The LA Latino Chamber created this webinar due to the response we received from our members on the previous webinar in April, acquisitions of businesses and owner-occupied properties, which included 100% financing for acquisition of commercial, real estate, and businesses. Our speakers have over 30 years of experience in the banking and finance areas. Our speakers are Reyes Mejia, CEO and broker and loan officer of SoCal Loans, and Wilbur Cabrera is vice president. Both will be providing you with a plethora of information on funding. Mr. Mejia is also the LALCC Chamber Board, and we are excited to welcome him in his new role. Mr. Cabrera served on our corporate advisory board a few years ago, so their commitment to our members and chambers is strong, and we are grateful for their time with us this morning. Joining us at the end of the session will be Mayra Braga, account executive at Delta Airlines, where she'll share some perks on small businesses, and I'll share information on our upcoming expo in July, so stick around. Before we start, we ask you to mute yourselves and ask questions in the chat box, and those will be discussed at the end of the session. Once again, this webinar is being recorded and will be available at the end of the week on our website. So welcome, gentlemen.
Thank you, Olivia. Thank you so much. Good morning, everyone, and thank you for joining us today. We're extremely excited to be doing this presentation. We definitely got a lot of great feedback from the last presentation, so we're extremely happy to be here. Joining us, it's Reyes Mejia. Reyes?
Hey, good morning, everyone. Thank you for joining us today. I hope this information is going to serve everyone in the small business community.
And my name is Wilbur Cabrera. I'm the Vice President of SoCal Loans. We're extremely excited, like we said, and we'll get started with the presentation. So one of the first things we get questions a lot is how can a client purchase commercial real estate or refinance real estate if they don't want to go through the SBA route. So one of those ways that they can accomplish that is doing a conventional commercial real estate refinance or purchase. Most lenders on the occupied business owner, that means that you normally occupied 51% or more of the property, right? So let's say if the property is 10,000 square feet, the usage in the inside, you're occupying 5,001, right? You're occupying a little bit more than the 50%. So you need to be at 51. Some lenders do consider investment, even though you're going to occupy the property, but if it's 51% or less, that would be considered more of an investment because now you're occupying less and you're maybe renting or leasing the space more, right? Most of the lenders will do 25 years, some cases 30 years. And now we're also starting to see some lenders go up to 40-year terms on the commercial real estate space. Some lenders will do what's called a 5-year amortization will be in 25 years, but the loan will be due, like, for example, in 5 years. So what that means is in 5 years or maybe even 10 years, that means that you will have what's called a balloon payment. Either you choose to refinance again if you qualify with that specific lender, or you might be able to choose to refinance with a different lender, maybe because they're going to give you a better term or a better rate, or you can stay with the same lender or pay off the loan completely. If you are purchasing commercial real estate and it's conventional and it's not being used by SBA, most lenders will ask you anywhere between 15% down payment up to 35%. I'll give you an example. If a client is purchasing a property and the lender is asking them for, let's say, for example, 30%, but you only have 15%, there are different ways to accomplish of you acquiring that piece of property. If, for example, the seller is willing to carry 15% of that note, and you give down 15%, and the lender lends you the 70% of the loan. That's one way that we are able to help our business owners acquire properties and negotiate and help them do that with the sellers. And that's a way for them to get the property. For investment properties is very similar, right? Like I said, in some cases, 40 years. Most of the time for investment properties, they'll ask you for a little bit more down payment. What we're seeing right now in the market, it's 25 to 35%. In some cases, depending on the type of asset that you're trying to purchase, they might ask you for a little bit more. One of the questions that we always get asked is, what do we need to qualify? So on the right side, as you see, this is called a needs list of what we see most lenders asking our clients, right? 3 years of business tax returns, the most recent, 3 years for the personal, all owners, most of the time is owners that own more than 20% of the business, profit and loss and balance sheet year to date, a personal financial statement. Personal financial statement is, what do you have personally, right? Assets, what are your liabilities? What debts do you have? Do you have a life insurance? What other things that the lender can see to make you look stronger with them so they can be able to give you that loan? These are some of those things that they normally ask. We get those questions asked all the time. What do I need to qualify? This is one of those things. And if you are going to purchase a property, we always recommend you to get pre-approved before. Always know what's the capacity that you have, right? How much do you qualify for? We often see clients going into a property, trying to purchase a property that, let's say, for example, it's $3 million, but the client only qualifies for $2 million. Now you have to go back to the drawing board and start all over again, because now you know that instead of 3, you only qualify for 2 million. We get asked a lot is, how do we get a conventional business loan and a line of credit? Conventional means we're not using SBA, right? That's what it really means. What can a business loan or a line of credit be used for? Working capital, equipment, if you're going to expand. And then when you're talking about expansion, it could be you may have currently an office now. There's an office that just became available right next to yours, and you're going to expand to that. Or maybe you're going to be expanding into a new market, or maybe opening a different location. The business loans, we get to see a lot of business debt consolidation. That's one of the things that we're starting to see quite a bit right now. The lines of credits, one of the things that you always keep in mind when you ask for a line of credits are meant to be used for short term. What does short term mean? Anything less than 12 months. Anything past 12 months, you should be getting a business loan. You shouldn't be getting a business line of credit. Business line of credits are meant to use for example, cover payroll. Two of the main things people use a line of credit for is for their account receivables, right? You're waiting to get paid. Once you get paid, you pay off the line of credit and the cycle starts all over, right? But that's usually short-term periods. Or people will use it for buying inventory in bulk. As we know, some of those prices have gone up quite a bit and inventory costs a lot more. So when you do buy inventory in bulk, a lot of the vendors will give you guys a discount. Conventional terms are usually 1 to 10 years. The average that we're seeing currently right now, it's 5 years. If you are buying, for example, for a business loan, if you're going to be purchasing a piece of equipment and that piece of equipment has a long life expectancy, then you can get those terms that are a little bit higher, up to 10 years. Sometimes in some cases, depending on the type of equipment, it can go further than that. And I'll talk a little bit more about that as well. Just keep in mind, right? A business loan can be used for many different purposes, but it needs to be used for something that's longer than 12 months. A lot of the times, a tenant improvement, that should be used for a bit. Lines of credits, like I said, it's meant to be used for short-term periods. If you see on the right side, there's the needs list, but if you see item number 7, when you're asking for a line of credit, they want to see account receivables, right? When you hear the term sometimes asset-based lending on a line of credit, that's kind of what they mean. It's an asset that you can't physically put a lien on, like I can't take it from you, but it's revenue that you have incoming in from your receivables. The SBA loans, I know we had a presentation last month, 100% financing for business and also commercial real estate. On the SBA side, there's also an SBA 7A and an SBA 504 that can be used for many different purposes. So, for example, these two programs can be used for owner-occupied commercial real estate, working capital, equipment, expansion, business debt consolidation. You can possibly get a line of credit also, acquisitions and construction. Very similar to the conventional. What the difference is that normally the SBA gives you more favorable terms compared to what you would get in a conventional loan. Normally, you would get a longer term. So normally on the SBA side, on a 7A, it's normally a 25-year term. It's one loan. On the SBA 504, it's a 25 years, but it's two different loans. That's very important to know, right? Some clients only wish to only have one loan, and some clients will want to have two. Normally on the 504 side, you usually get a better rate. That's why a lot of people like to go with opposed to a 7A. Usually they're a little bit more expensive on the 7A, but right now anything under $1 million, there's no fees currently. It's a guarantee fee that they normally would charge. On the 504, it's usually 50% from a conventional lender, 40% is from the SBA, which goes through what's called a CDC, and then 10% down payment, it's usually from the client. In some cases, depending on the industry that you're in, the down payment on an SBA 504 can be longer. And that's usually for example, for a specialty use property. What's a property? Like a hotel, right? That's a specialty use property. I can't turn a hotel into anything that I want. It's not like a commercial space where I can put multiple different types of tenants in there. So sometimes just keep that in mind. Depending on the line of business, that might be a little bit more, but for most, it's usually always the 10% down. This is where I was going with the piece of equipment. When you're purchasing equipment, depending on the life expectancy of the equipment, most of the equipments that have a very long time life expectancy, that's usually a piece of equipment that's usually about $300,000 to $500,000 and above. That's usually when you can use an SBA 504 program to purchase a heavy piece of equipment. And it works very similar, like the real estate, right? There's two loans. There's a loan from the main lender. There's a loan from the SBA, which goes through what's called a CDC, and then the 10% down payment from you, the customer. 7A side of the SBA terms are 10 years, usually for acquisitions. If you want to do working capital, you could also purchase equipment. So the SBA 7A is usually used more for purchases of equipment, commercial real estate, business acquisitions is very big. You can also, some lenders offer a line of credit through the SBA 7A program as well. And the expansion loans, that's very common when you're expanding. The SBA 7A is a phenomenal tool. One of the other things that we do a lot, and we're actually helping with the startup loan. A lot of the lenders don't do startup loans, but there are other lenders that actually specialize in startup financing. So we actually have a few of those clients that we're actually doing that for them. And what is startup cost? When you think about startup cost, think about, are you going to be leasing a space? How much is that rent? How many associates are you going to be hiring? Right? Sometimes people will hire 5-10 associates. That can get very, very expensive. How much inventory are you gonna have? What are gonna be any tenant improvements that you have to do to the building? So those are things when you're thinking about startup costs. Those are things that you should be thinking about and you should be putting into your plan, especially when you're going to apply. Mostly for any type of loan, the lender wants to know exactly how every penny is going to be used, right? So this is where you make a breakdown. We actually help our clients. We have an Excel sheet where our clients put in every single they're going to have, that we can show to the lenders. And now the lender's going to really understand exactly how you're going to be using those funds. And on the right side, right, if you're starting to see a pattern for conventional SBA, the pattern on the needs list is very, very, very similar. A couple of things that will change here and there, but the patterns are always different. They're going to need 3 years of taxes, right? Personal and business, right? They're going to need a profit and loss and balance sheet. They're going to need your personal financial statement. They're going to need to know your business deal. So there's a few things that always for conventional and SBA lending, they're very, very similar on the lenders are going to need. On the SBA side, the FICO score, that question asked a lot. What's my credit? How much do I qualify? Some SBA lenders can go as low as 600 for doing an SBA lending. There are nonprofit lenders that can do loans up to $350,000. It's a program that it's only available to them, but it's an SBA program. With that program, they don't really have a credit FICO score, but they do have other different criteria. And if your FICO score is less than 600, you're just going to have a really good explanation on why the FICO score is where it's at and what is it that you're doing to improve your credit score. Alternative financing, this is something that we're starting to see quite a bit more, and we get a lot of clients asking us for alternative ways of financing. What's alternative ways of financing? One of those ways is for example, equipment lending. This is normally when a client does not qualify for conventional financing, right? Where it's a full financial package where they ask you for the 3 years of taxes, personal and business. These are those alternative ways where a client can still qualify. One of those tools that they can, which is the product for equipment financing, anywhere between 10,000 up to $1 million. Sometimes, some cases, it could be higher. But when you think about equipment financing, it's something that the lender can put a lien on, right? And it's usually a hard asset that they can go and take back: semi trucks or reefer truck, tow trucks, CNC machines, equipment, manufacturing machines, medical equipment. There's a lot of things that qualify for equipment financing, but those are things that a lender can actually put a lien on. And if for whatever reason you don't pay, the lender can go back and retrieve their equipment. Most of the terms that we're currently seeing, it's 2 years to 6 years. The main difference here is some of these lenders don't really have a credit FICO score. We've done a lot of equipment lending for clients with very low FICO scores. When I mean very low, we're talking 500s. And we have been able to help those clients get the financing that they need. In most of those cases, the lower your FICO score is, the likelihood of you putting a down payment or a higher down payment is going to be very likely, right? Because there has to be a mitigating factor to the lender to feel comfortable in giving you that loan. The main difference is, if you look here on the right side for the needs list that we need, it's very, very simple. We need a business loan application. It's literally a one-page application. A credit authorization form. It's just a one page. We need the 3 most recent business bank statements if it's an existing business. For a new business, we need the 3 most recent bank statements, and we also need the invoice. But these have to be done anywhere between, we can get them sometimes, the approval, we can get them same day, sometimes 24 to 72 hours. We have gotten funding and approval the same day in some cases. So this is a tool for those clients that are not able to qualify due to either their credit score or due because maybe they have too much debt and their taxes are not what's called cash flowing. So when we talk about cash flowing on a conventional loan, most lenders, if it's SBA, they want to see 1.15, which means for every dollar of debt that you have an expense. Some cases it could be a little bit lower, but that's how it usually is for SBA. If it's conventional, usually they start out with 1.25. So for every dollar in debt that you should have an extra 25 cents. And then depending on the industry, it could be a lot higher. So you can see how it can become very difficult, especially with COVID, with what happened, right? Not that many businesses were doing great. So their taxes have not been the way that they used to be the prior years or pre-COVID. So now there's time to explore different ways of financing, this is up to use. You can still get very great terms. You can still get very good rates. This is one of our most common tools that we use for our small business when they're trying to get a piece of equipment, because it's extremely fast, right? They don't have to show full financials. So it just moves a lot faster. In some situations, the client gets a very, very great deal. So they kind of like, you can also, it's called like bridge financing. And what that means is you can use this as, for example, if you have to buy this, you have to buy it immediately. You can buy this piece of equipment, then you can go back to your lender and apply through the full financials. Usually, from what we're seeing for a piece of equipment, I've seen it take anywhere between 25 to 45 days to be completed. But if you have only a very short period of time, then this is one of those great tools that you can use to purchase a piece of equipment, and then you can refinance the piece of equipment with your lender because it's gonna take a longer, right? One of the other that we see is loans for any type of purpose, right? It can be for, like what I was saying, lending, working capital, equipment. It can be used for real estate. These are what a lot of people know these loans as MCAs, right? Merchant cash advance loans. This is when you use your bank statements. This is truly for the client that their credit is not the best and their taxes are not the best either. So they qualify based on their bank statements. Some of the things that these lenders look at is, for example, at the end of the day, when you get your statement, there's a daily ledger, right? The daily ledger lets you know, how did you end business day? Did you end the business day positive, or did you end the business day negative? So most of these lenders using bank statements, they don't want to see no more than usually 3 to 5 in the last 6 months that your account was negative, or overdraft fees. So you always want to make sure that if you're using this program, you're always in the green, as we say, right? You're never negative on your bank. Loans are usually very short term. They can be anywhere between 1 month, 18 months is usually what we see, but in some cases we have done loans up to 24 months. A perfect example, when we have a right now that's purchasing a piece of commercial real estate. He does not have the funds, commercial real estate. He doesn't even have payment as well, but he does process quite a bit on his bank statements. He processes about $1.5 million every month. So this client, using this program, he's going to be able to acquire this piece of property using the bank statements. And then what he's going to do is he's going to refinance it, right? So he's going to get about 70% of that loan paid off, and then he's going to have the 30% from this loan, and then the 70% from a regular financial institution. So these are different ways that we're able to help a client with some of those needs. And if you see to the right, it's very simple, the ask. It's a one-page application, the credit authorization form, and in most cases, it's a form for the four most recent business bank statements. If the loans get higher, usually more than $200,000 to $250,000, they will ask normally for just the profit and loss and maybe the most recent tax year. But the underwriting for these types of loans is extremely lenient. It's very based on how much money is coming in to the business every single month, and are you negative, right? Those are the main two things. Sure, they look at your credit as well, but like I said, they're a lot more lenient. We've done a lot of these with FICO scores as low as 550, some cases a little bit lower than that, depending on the situation, but they're very, very lenient. The only on these loans from conventional and SBA loans, most of those loans are done with the payments monthly, right? In this case, most of the payments are either, they can be daily, they can be weekly, they can also be bi-weekly in very rare cases where the payment is bi-weekly. But for most part, the payments are done weekly and bi-weekly. So think of this as a loan that you come in to us, you say, Wilbur, I need 100,000, and we collect these items. We go to lenders, we present your case, your scenario, they get the money, and in some of those cases, you're able to get the funding the same day. So it's literally a lender giving you the money. Here's $100,000, and I hope you pay me back. Literally, that's literally what they're saying. So there's no lien on where they can go and take a piece of equipment away from you in case you really used it for that. But if you really used it for working capital, there's not really anything that they can go and take away. So the reason why they take the payments out weekly or daily, it's because of this, right? The risk to them is extremely high. The rates on these, it's not your typical annual rate. It's called a factor rate. And you guys can read to me after the presentation. We speak a little bit more about if you have a scenario. The last one that we'll be discussing is called asset-based lending. And most of the time when we hear this term, asset-based lending, we hear about like a line of credit or commercial real estate, right? That's a piece of asset that they're putting a lien on, or they're putting a lien on your account receivables, or they're putting a lien on your inventory. That's usually what we commonly hear. But there's a different asset-based lending for small business owners. And in this case is, for example, you might have, it's secured by collateral, but let's say you have commercial trucks, heavy piece of equipment, residential or commercial real estate, vessels, maybe you might have boats, aircraft, or luxury vehicles. So I'll give you a great example. We have a client currently that has a boat that's worth about $5 million. It's paid off free and clear. He doesn't qualify for a loan using his bank statements. He doesn't qualify for a loan using his tax returns. Doesn't qualify for any of those. So the only option we were able to present to him was an asset-based business loan. So in this case, what we did is we found him a lender that does these type of loans for small business owners. Even though he has a boat that's owned personally, the lender came in and said, I'll give you what you need. He needed about $800,000. We'll give you your $800,000, but we're going to put a lien on your boat, but the loan is going to be a business loan. So the client was able to get a 6-year loan for his business using an asset that he personally owns, but we were able to get him the funding that the client actually needed. So this is where we talk about, this is a truly asset-based lending where we can actually put a lien on something that can be retrieved, right? I can go in and take your commercial truck or your vehicle or your vessel or your aircraft. Most of the terms, they run 2 to 10 years, depending on the credit. If you're going to be purchasing, depending on the collateral, they usually ask 20 down, and it's monthly payments. If you are going to be refinancing, taking money out, usually at 75% loan to value. So they need to have some equity in there, right? On this one, the needs list is very similar to the conventional and to the SBA lending. Guidelines are very, very lenient. They're based more on a piece of asset that you have. They just want to know, okay, roughly how your taxes look the last 3 years, your profit and loss and balance sheet, your personal financial statement. But that's really it. It's not so much the full-on underwriting that a traditional lender would do. It's basically more, what's your credit, what's the need, and does the asset that you have that you want a collateral, does that asset have enough equity for us to be able to take money out and give you the business loan? One of the things that I didn't, does somebody acquire a property using a hard money loan?
So with a honey loan, typically the loans range 1 to 2 years. Depending on the class, lenders will go up to loan to value. If you guys want to borrow a piece of land, typically right now we're seeing 50% loan to value. It really depends on asset, type of asset, office building, industrial building, retail building. And one of the things that hard money lenders always want to know is going to be the strategy for purchasing this property. So typically, if you have to move really fast, there are some lenders that don't even require an appraisal. They just require a loan application. They do run the credit just to see the health of the credit, but it doesn't determine their decision on lending you the money for the purchase. So hard money is typically used for you to be able to move quick on an acquisition. Sometimes there are auctions for financing, so you're able to get hard money, and typically we're able to close within 5 to 7 business days. So hard money could be used for those type of acquisitions, and typically they go up to 65% loan to value. There are times that they're able higher but they will require financing another piece of property to make the stronger. So for any questions on hard money, me and Wilbur are available, but that's typically what hard money is used for in extreme cases, or sometimes you just need quick without going through the traditional.
Right. This is when you hear times as well, people use the term bridge financing, right? To raise this point, it might be a property, a very good property that's being sold in auction, where you're able to acquire that property through a hard money loan and you use it as a bridge financing, which means that you have the exit strategy usually is you're going to refinance it to a conventional loan. But the reason you couldn't do that, it's because we all know that conventional lending usually takes a little bit longer, right? The fastest property I seen close conventional lending was maybe about 20 days, but that's still 20 days that maybe somebody doesn't have. Maybe they only have a week because they're buying something through auction. So those are different options to definitely always keep in mind, because there's definitely options out there that are to help you acquire whatever it is that you're trying to do. If it's a property, piece of equipment, or maybe you're trying to grow your business, there's different options. Just wanted to show you a couple of the most recent transactions that we have done. So, like for example, when I was talking about the statement loans, this loan specifically, it's a very good client of ours. They always come back, but they're growing very rapidly, right? We have helped these clients get funding through the traditional route as well. And this is a perfect example of a client that needed this type of, they needed about 900,000. They were able to get about 650,000 through SBA. And then they came back to us because they needed the rest. So then we actually used the statement program to be able to get them the extra $250,000 that they needed. And this one got approved one day and then funded the second day. That's how fast some of these loans can really move them. The $400,000 one, that's the asset-based loan program. That's the one where this specific client, she had a property, her business didn't qualify, she was over leveraged, she was over statement loans as well. So the only way that we were able to do this was she had a home. We were able to give her a business loan, putting collateral under using her personal home, still able to give her a business loan for 5 years, right? And you can see she used about 160,000 to purchase equipment. She restructured $170,000 of debt behind. We gave her an additional $70,000 for working capital. The $2 loan that we refinanced for commercial real estate, this client actually went from being a specific property to going into, he had an SBA loan, but he needed to get out of that SBA loan because he doesn't own that business anymore. So now the client became more of an investor. So those are things you need to know, the type of loans that you have, what is it that you can do in certain types of scenarios. So in this case, the client needed to get out of that SBA loan because he didn't own that specific business anymore. We had to refinance it in a very short period of time. The client only had about 35 days, but we were able to help the client out. Does anybody have any questions? Any questions on the chat?
Well, there was a question at the beginning. Do you recommend a line of credit for working capital, for example, new hires?
100%. You should have, most of the time, if you don't have a business where you have account receivables or you need to purchase large pieces of inventory, it's always great to have a line of credit regardless, even for a rainy day, right? You should have a line of credit to either, unexpected expenses. Payroll is definitely one. You should have a line of credit. Never know if you're going to get busier and you have to hire more employees. So the answer is definitely yes.
Okay, this is the second part question. So if you have a new contract and need to hire to sustain the new work, do you recommend a loan or a line of credit?
Very good question. Depending on the contract that you have, how big is that contract? So in some cases, for example, we have had clients that actually have a great client right now that has a contract with the state of Hawaii with everything that happened with the fires. He has a 10-year contract with them. But initially, he needs about $1 million right away. With him, we have to do a loan. So with him, we're doing a loan. It's going to be a 5-year term loan. He already told us exactly how he's going to be using those funds. But we're also going to be opening a line of credit at the time that he needs it. He doesn't need it yet, even though he has this big contract. but we will be doing a line of credit for him as well. So it really depends on the scenario of contract it is that you have. For the most part, sure, let's say if you're in construction, a lot of those people that are in construction, a line of credit is usually the best because it's always short term. As long as it's anything that's going to be used for less than 12 months, then that answer would be yes, a line of credit.
And typically, how long do you have to read a line of credit?
Good question. So a line of credit needs to be paid normally at least once a year, and you paid. Think about short term, right? So a line of credit, you shouldn't be having a line of credit where you got $500,000 and you're giving the minimum payment every single month for the next 12 months. What will happen is, in most cases, the lender will do what's called, they'll term out your line of credit. What that means is your line of credit is not going to be a line of credit anymore. It's going to be a loan. And some lenders in some cases will say, we're closing your line of credit and you have 90 days to pay us back. But most say, hey, look, you got this line of credit, you're not using it correctly. So what we're going to do is term out the line of credit. Usually when they do that, the term is anywhere between 3 to 5 years. In some cases, depending on the line of credit size, it might be longer. So a line of credit, always remember, needs to be used for short-term working capital. So it means you used it today, paid it back 4 months, right? You could be giving the minimum payment for the next 3 months, but in the 4th month, maybe you paid it off completely. But you should at least be able to pay off the line of credit at least once within those 12 months. If not, most lenders will term out the line of credit and make it into a loan.
So that would apply for businesses. What if you gave the example where the woman, or your client, I should say, used her home as a collateral for a loan? So would she be able to get a line of credit from her house? And if so, would that also be considered a short-term loan?
So that would be more on the residential side. Reyes, do you want to answer that question?
The line of credit on a home could typically be for a 30-year payback the loan. For a business loan, the business border, right? Wilbur, what's the
Yeah,
time
so
you got?
you said 30 years on the personal side. Line of credit is a revolving line of credit, and it's usually for 12 months. So what most lenders will do is, sometimes lenders, especially in the times that we're currently in, most lenders will most likely ask you for financials to see if you can still afford this line of credit. That, and like to Reyes' point, on the residential side, a line of credit will be for typically 30 years. So there's a big difference, right? On the business loan, it's more used for short-term working capital. On the personal side, doesn't really matter. You can be paying it every single month for the next 30 years.
Okay. And the rate on those will vary, correct? Because one is commercial and one is personal.
Correct. So always think anything business, the rates are usually higher from personal. That's usually the best way to think about that. Always personal rates are always going to be lower than business. The question is, why is that? Usually businesses have a higher risk than you doing something personally, right? When you buy a house, you're the one that lives in the house with your family. When you buy a building, you have a lot of employees and a lot of things can happen, right? So the rates always shift when it's personal and business. Business always usually, for the most part, a higher rate.
Okay. All right. Thank you for answering that. Does anyone have questions they'd like to ask Wilbert or Reyes now that we have them here with us?
My name is Sharon, and I'm wondering if you have any resources for business grants.
Oh, business grant. What city are you in, Sharon? Okay. Send me an email after this,
Okay.
Sharon, and I send you a couple of links.
Oh, that'd be great. And is your email in the Zoom?
Yes, ma'am.
Can you announce your email address? I'm on audio only.
Of course.
Thank
Yeah.
you.
Address is w.cabrera, C-A-B as in boy, R-E-R-A, at SoCal, S-O-C-A-L .loans, L-O-A-N-S. And my phone number is 818-454-5483.
Hi, just hopefully really quick, but this is really great information. My question is related to people that are just starting, don't own a home, or are looking to raise capital, having challenges there. are there any alternatives for people? I know grants, right? So I'll send you an email about that as well. But are there any other alternatives that you might have for somebody in that situation?
Yeah, there definitely are. There are nonprofit, they're called CDFIs, definitely work with that are able to help startup businesses. They have loans up to 50,000, and then they also have loans up to $350,000. And it also depends on the community that you're in, but mostly throughout the United States, they're what's called CDFIs. They have these programs that are able to help clients that are as long as you have a business plan, you have a great bio, it makes sense to them. Most part, it always does. So there's definitely options. So definitely reach out to me and I'll send you some information, because we get that question asked quite a bit, that we help out a lot of clients in this type of situation.
Awesome. Thank you so much.
There is another question. Can you refinance SBA 7A loan if needing additional capita or get a second loan?
Yeah. So remember, the SBA has a limit, right? So most SBA loans have a limit of $7 million. So depending on what your limit is currently now. So if your limit is $1 million, you have an extra $4 million to get, depending on what is it that you need it for. If you need to refinance the current, let's say, for example, $1 million that you currently have to a better rate, sure, you can refinance existing SBA with another SBA loan. But if you do additional capital, that's definitely not a problem.
I don't see any more questions nor any hands. Okay. Well, I know, Wilbur, you and Reyes will be participating July 24th. You'll have a booth there, and we want to thank you in advance for your support and for being a sponsor at the event. So with you being there in person, we invite all of you to attend, and I'll share that in a little while. But, you know, this is a great way to connect with a lot of our speakers. You have a wealth of experts in different areas. So keep attending our sessions. And on that note, I thank Wilbur and Reyes for their time this morning. And now if we could have Maida. Maida is Delta Airlines, and she'll be sharing some perks for your business.
We're very excited to be one of the Chamber's members and a proud sponsor of LA Latino. Today, just to finalize, we're gonna go really quick with some of our and recently awards that Delta received. So this week we announced that Delta has received an award that we're one of the 50 most community-minded companies in the US. That award was given by Points of Light with one of our largest nonprofit organization. And this award came in 7 years in a row. So that's pretty exciting and shows all the work and support that we have done with our local communities, not just in Los Angeles, but in the entire USA. Our employees are extremely engaged with supporting the local communities, and that's why we're one of the sponsors of the LA Latino Chamber, and we want to keep supporting all your travel needs. I know we talk a lot about business, but it's also exciting that we have summer coming, and I know a lot of people are planning their trips. With Delta, you can fly to more than 300 destinations worldwide, but today I want to highlight our network from Los Angeles to Mexico. So we have daily flights to all the main beaches in Mexico: Cancun, Puerto Vallarta, Los Cabos, and also to the Mexico City, when you can explore Mexico City or take a connection to any destination in the beautiful country of Mexico. We do have a partnership with Aeromexico. So Delta and Aeromexico, we work together. Make sure you get your travel plans and book an exciting ticket to one of those destinations. And last but not least, I know some of you have heard about the program, but if not, it's new. I want to highlight the Sky Miles for Business program. This is a loyalty program that we have, that every time that your company flies with Delta, Aeromexico, Virgin, Air France, and KLM, your company accumulates miles. And with those miles, you can redeem to many perks, such as travel awards, upgrades, access to our beautiful VIP lounges, and much more. The beauty of this program is that it's free, no cost. You as an employee, when you travel, you still get your own miles, and the company on top of that also get the miles as well. In order to qualify for this program, your company does need to travel with Delta at least and spend at least $5,000 a year and have 5 employees that travel every year. If you don't meet that requirements, you can still be part of the program and get access to all the travel reports, so it can help you to better budget your travel needs and costs. I will share my contact details in the chat. So if you have any about those programs or any other travel needs that you might have or need any help, I'm happy to help. And I'm also gonna be in person at the Business Expo and looking forward to meeting all of you. So hope you can attend, spread the word with your friends, family, business associates, because it's gonna be a great event. I know Olivia is working really hard, so we're very excited to be there and support the chamber efforts. Thank you so much.
Well, thank you, Maida, and congratulations to Delta. And if you would like to share some of the perks that people can gain while part of the expo?
Sure. So if you are traveling from outside of Los Angeles and you need to get a flight to get to the event, we're gonna give a special discount for the attendees. Olivia will post as soon as possible on the website so you can get those discounts, book your trip. The discount's not valid for LAX, but also Santa Ana and Ontario airports as well, so it's a little bit closer to the event. And we have some special to announce, like some raffles. I cannot share too many details because you need to be there in person to find out what we're gonna offer you.
Well, thank you. We appreciate the support from Delta Airlines, and Delta is the official airlines of the LA Latino Chamber. So our upcoming Business Expo, July 24th, which is a Wednesday, at the Sheraton Conference Center in Pomona. So we have great support for many of our partners. There's no admission to attend. So if you'd like to register, please do so at lalcc.org. We have an exciting panel speakers on energy, procurement, workforce development. We also have sessions in the afternoon with strategic business connection, matchmaking, as well as workshops, and you can access through DG. You know, it's really important for us to send the resources that we have for you at the expo are geared to helping you scale. So together we thrive. So on that note, I invite you to join us. If you're interested in becoming a sponsor of the event, please let us know, or if you'd like to be an exhibitor. So contact me at olivia@lalcc.org for more details. And we wish you a happy Thursday, and thank you for joining us.